morning, Yum Brands, the parent of Taco Bell, Pizza Hut, KFC, completed the long-awaited spinoff of their Chinese business as a separate company, Yum China Holdings. That's trading under the ticker YUMC. You got to add the C. Now, I've been a big fan of the story ever since Yum announced the breakup last year. With Yum China, you get a growth stock that's a play on the rising middle class in the People's Republic, while the new Yum Brands is more of a steady Eddie play in the United States and the rest of the world, aside from China. If you own the old Yum, you have a share now in each company. Now, that the split has happened, I think we've got to get a much better sense of what's really happened here. So let's take a close look with Greg Creedy, the CEO of Yum Brands, find out what's next for his company now that it's spun off the Chinese business. Mr. Creedy, welcome back to Mad Money. Good to see you, Greg.
Thank you for having me.
All right, this was a stunning success. I mean, the buying today in Yum China took my breath away. A huge amount, and people went nuts for it. This is the single best way now to play the explosion of the middle class in China.
Absolutely agree. I think it's what we said. We wanted to create shareholder value by creating these two powerful, independent, focused growth companies. And I think what the market's reacted to today is obviously the huge growth opportunity in China. And I think the story for us is we're going to grow probably faster than people think, but also obviously return a lot of capital to our shareholders and become a capital-light business. So.
But let's talk about that because there have been a lot of doubters. I mean, I've read through all the research. People saying, well, wait a second. There were issues about food safety. There were issues about whether it's still aspirational. There were issues about the competition. But it looks like the buyers are saying, no, this is still the premier American brand in China.
Listen, there's three reasons you should buy Yum China. The first is urbanization. 75 million people a year are moving into the cities. That helps us grow. Right. Second is the infrastructure spend. It's on railroads, it's on motorways, and it's on airports. We can build facilities in each one of those. And then the last one is just that there's malls. There's 1,250 malls they're going to build. So if we add 1 or 2 stores per mall, there's at least 2,500 new stores that can go in there.
Can you ever get back to the peak volumes that you were at?
Absolutely.
Why? Why should we believe that? Because it's been a rough road?
Yeah, because take KFC US.
Okay.
2 years ago, everyone was down for the count. Everyone said, hey, you should get rid of it or do something to it.
That's true.
We just delivered our 9th quarter of consecutive same-store sales growth, plus 6 in the 3rd quarter, of which 4 was transactions. So I believe if you make distinctive, relevant brands, you can turn brands around.
All right. Now, we are a different show from the morning show. I was thrilled to have you. And I want to talk about the notion of suitability.
Yeah, right.
If people want to get a big dividend and they want to get income over time, they would want to be in old Yum, right?
Well, right now, we're obviously going to pay a dividend. We're going to pay out about 45 to 50% of retained earnings as a dividend.
Right.
And as you know, we've been paying a dividend for the last 11 years and increased a double digit every year.
Right.
So we're definitely going to be an income payer. We're also going to return $13.5 billion of capital between Q4 15 and the end of 19. Now, whether Yum China declares a dividend, that's up to the board.
Right.
They haven't met yet. But you can guarantee that we'll definitely be a good dividend-paying stock.
But we have seen with Domino's Pizza, this franchise model has been fabulous. So you look like you're going that way for Yum. Yeah,
we're going to a highly franchised, highly focused.
But there's a lot of room. There's a lot of stores.
Oh, yeah. So even after we spin off China, we'll own about 3,200 restaurants around the world. By the end of 2018, we'll own less than 1,000.
Right.
That will produce about $2 billion in after-tax proceeds. We're going to return all $2 billion to the shareholders.
All $2 billion?
All $2 billion.
Okay, that would be quite different from the current way that things are run.
Exactly.
Now, I think a lot of people don't understand. When we look at KFC, it really is the equivalent of McDonald's in emerging markets, isn't it?
I think it's actually bigger than McDonald's in emerging markets, and the reason why is because chicken is the preferred protein. So if you're in Asia, Africa, Middle East, any of those places, chicken is the preferred protein. So I believe our emerging market story is a powerful story and one that maybe not everyone understands well enough or gives us enough credit for delivering.
At the same time, I was at a Taco Bell recently. You've remodeled Taco Bell. Taco Bell's taking advantage of situations in America where one competitor is not doing as well. But it's not natural and organic. You have a lot of chemicals in it. I mean, a lot of preservatives. We should preserve it. You can use either word.
Right.
And yet it's still doing well. Is that defying the current ethos and zeitgeist of America?
Well, the first thing is artificial flavors and colors are coming out of Taco Bell as they are at Pizza Hut. So that's all happening. It'll be done by the 1st quarter of next year. We've taken out 15% of the sodium in the Taco Bell menu. But what people crave is craveable food, great value, a great experience. Food's no longer fuel. Food's gone from fuel to an experience worth sharing.
But they also like the price, right? You've got a tremendous
dollar value menus, 30 items for $1. There's certainly people love great craveable taste at $1. There's no doubt about it.
Okay, What do you do differently as a franchise company versus currently? What changes?
We really focus on the brands and growing the brands. We're going to build these distinctive, relevant brands, and what we're not focused on is the day-to-day operations. And what changes for me is if I go to visit a country that's got 500 restaurants and we own 100, we tend to get maniacally focused on the 100 instead of the 500.
Right.
So that's what's really going to change. We're going to be much more focused on building these brands on a global scale.
Very few people have the pulse. First of all, most people don't even know that you're the biggest. I mean, you're everywhere. Very few people have a pulse in the world and on our country like you do. What's the state of things? I mean, we're pretty gloomy here in this country. We read about like Brexit, and we think things are gloomy in Europe, and we start thinking, well, geez, China's not doing that well. Latin America. You're by nature, you're an optimist, as was your predecessor.
True.
But could you give us just a realistic view of the world as you see it?
Sure, well, I'll give you a good example. We just signed a 300-unit development deal for Pizza Hut in Central and Eastern Europe with a franchisee over the next 5 years. They're not going to build 300 units if they don't believe there's a growth opportunity. So that to me is a great example. We just opened our first Taco Bells in Brazil.
Brazil. Now in Brazil.
So
you wouldn't do that unless you thought Brazil's going to come back, because otherwise you think the real's going to kill you.
Absolutely. And the franchisee has agreed to open 25 by the end of 2019. So everywhere I go, everywhere I look, people are building and opening new restaurants. They're not going to do that if they don't think they're going to get a great return and if they don't think they're going to get customers to come in.
All right. Now let me ask you, be a play skeptic.
Yep.
We have been waiting for the turn in Pizza Hut a long time.
Yes.
Why should we now think it's going to happen?
There's a couple of reasons. Okay. One, first of all, we've got these aging red roofs, which have been around for 30 or 40 years.
We talked about that this morning, and I'm skeptical of that.
But the franchisees have committed $1.5 billion over the next 10 years, not to modernize them. They're going to go away. Right. We need to replace them with a small box Delco or this fast casual concept. We actually have developed a fast casual Pizza Hut concept, only in a few stores. So it's a bit like, we'll call it Blaze, but where you can get a 9-inch pizza and a drink for $5. It's
not bad.
And sit down.
So now we know that Domino's, really, the share take has been against the mom and pops. I mean, same thing for you guys. Is that the plan?
Mom and pops is definitely, that business is definitely moving into chains, no doubt about it. Now, have Domino's done well? Yes, they have. We have to do much better. We have to get technology. We have to build a relevant brand. And we have to obviously upgrade our assets. And those are the three things we're very focused on.
We look at China and we don't see what's really going on under the hood, so to speak. Your stores are not serving traditional food. You have breakfast at Pizza Hut, right?
Yeah, we serve.
What is that? Tell me that.
So we can serve you bacon and eggs in a panini with a coffee for less than a Starbucks coffee in China.
How's that possible?
It's very possible. Because we've got, obviously, we own the supply chain, we own the food supply chain in China. We've still got great margins, in our China business. So yes, we have breakfast, which we have we also sell sizzling steaks, escargot.
Escargot?
Yeah, escargot at Pizza Hut in China.
Well, okay, why?
Because that's what customers want. But it's a full service casual dining experience. It's what we call 5-star service at a 3-star price.
I'm going to leave it at that. I just kind of like that.
That's great.
I think it's a good way to leave it. All right, that's Greg Creed, CEO of Yum Brands, who never ceases to amaze me, frankly, but what a success. I want to congratulate you.
Thanks, man.
You saw it, you were right, and it's moving. That's Mad Money is back after the break. Here we go. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.